Many a times, people who are starting with a new business are confused as to what form of organization should they register, because they have no idea as to what formalities will lay ahead. And in their enthusiasm of starting with that new business, they are so enthusiastic, they are so much in that mode that, okay, I want to start something big and grand, and then everything will be really, really good ahead. This is what is the mentality, of course, of everyone who is starting with a business. But what happens in that enthusiasm, you may just land up registering directly a company or an LLP and a partnership without even knowing what are the formalities that are in line ahead. And once you register and you start with the business, you realize, oh my God, so much of cost is going into the formalities and fulfilling the audits, the procedures, the accounting, the return filing, and so many different things. At the same time, there are very strict guidelines for certain types of organizations as compared to others. So, for ease of doing business, if you're just starting with your business, what type of organization should I register? Should it be a company, a proprietorship, a partnership? What are the pros and cons of it? So, all this we are going to discuss in today's part 2 of Organization of Commerce and Business Management. So, this is the course which is going to be a series of some videos which will give you a general idea of business, trade, commerce, and also at the same time things like as to the formalities of what the government expects from different types of organizations. It will give you an idea of how business environment influences your business, what are the tactics, a few things that you have to keep in mind when you're doing business, and so on. So in the first part, we have dealt with what is the meaning of trade, what is the meaning of business, and at the same time, a profession. So today's part, we are going to focus on, this is part 2, which we are going to focus on the types or the forms of business organizations and their advantages, disadvantages, or in other words, the pros and cons of them. So coming to the first simplest form of business organization or the type of business registration that you can do is a sole proprietorship. A single person wants to start with a business, no partner, no person who probably can be brought into the business in the initial stage. He has some capital and wants to start with a business. Simple thing, you have to start off as a sole proprietorship. Don't go for any fancy registrations if not mandatory or required to procure the business. So if you start as a sole proprietorship, I'm going to first connect you with the understanding of what type of registrations are required as a sole proprietor. See, for a sole proprietorship concern, government has made it very easy with a simple formality of just putting your notification that, okay, I'm starting with a business on the Shop Act license. So you don't need a full-fledged license, but what you just have to do is intimation has to be sent in what we call as Form F. And this is when your number of employees are less than 10. So if you have 0 to 9 employees in your organization, intimation in Form F is sufficient, and this can be filed online and in basically a few steps and a few documentary processes has to be done. So only few documents have to be submitted. This has to be done within a time frame of 60 days from the starting of your business. Now, many times what happens when you go for a full-fledged Shop Act registration, then you will have to comply with certain things, formalities, re-registrations every year and so on. But for this Form F, which is the intimation, what you're supposed to do is just one step and a full lifetime access. So once you intimate that I've started with this business, it's as good as a lifetime validity. Less than 100 rupees of charges. Agents and people who do some consultancies relating to it may charge you a separate fee, but the government fee is very less, and you can do it by yourself. Online, you go on the website and you just register your Form F. Once you do that, once you submit the basic documents like PAN card, then address proof, and simple things like Aadhaar copy if at all needed. So all these once you submit, you will get an intimation in Form K that, okay, your organization is registered and we have recorded that you have started with a business. That's it. So your business has got a head start. Now it's that simple. Now, if you don't have any kind of interstate sale, that means outside your state, if you're not selling or buying any goods, you don't need a GST number also up to the limit of the turnover, which is currently the 40 lakhs limit for business goods. And for the purpose of any kind of services, it is 20 lakhs. So if you are not crossing this limit, you don't even need a GST registration number. Another benefit to a sole proprietor is that he has full control over that business. So what you do, you register your business, you run your business in accordance to your own free will. Nobody is going to be there taking any decisions in your business. So if tomorrow you want to sell to a particular customer, you can do it. If you don't want to sell to a specific customer, you can do it because you are the sole owner to decide on the thing. So this is the best advantage the person can get. Plus, at the same time, any formalities like if you're talking about TDS formalities, tax deduction at source, which you're supposed to do under income tax, like I said, GST registration below a certain turnover, Then if you talk about compliances, like and for companies it is like every year you have to prepare a specific balance sheet, submit it on the portals, the company portals. You have to get yourself registered under Companies Act and so on. So there are different formalities which are existing for other types of organization which don't exist in sole proprietorship. So you're in a very advantageous position in terms of formalities till you cross a certain turnover limit of course, right? So if you're crossing the limit of tax audit and all, then maybe a few formalities will start off. But still, a proprietorship concern is easily manageable. Plus, now if you want to transfer funds from your current account to your personal account, from your personal account to your current account, it's not difficult. So you can do it with ease. You don't have to make every time some kind of notice has to be sent, or you have to intimate other people that I'm doing this kind of transaction, or nor do you need to submit this kind of thing like minutes of meeting which has to be done for sole proprietorship. You don't have to do anything of that sort. So flexibility wise, sole proprietorship is the best business option to register, to start with the business and go ahead. Now, what are the disadvantages of a sole proprietorship? The first very disadvantage to a sole proprietor is in terms of growth. So if you want to grow, if you want more investment, if you want capital, if you want bigger companies to approach you in business, or if you want to have even internationally, you want to get a recognition, sole proprietorship becomes it's a block for your business, because nobody will recognize this organization to have validity, to have that kind of branding. You will not have all that. So sole proprietary concerns always want to go a step ahead if they are looking for expansion. But of course, to start with, there's no harm in putting it up as a sole proprietorship. Then another disadvantage is in terms of any kind of liabilities. So if you have taken a loan on a sole proprietorship business for the business purpose, and by any unforeseen reason or any problematic situation, your business goes into big loss and you are unable to repay the loan from the business assets, then what? Then your personal assets will also be at stake. So bank will not just sell off the business assets which you bought for the business purpose, but if you have a home, if you have a car, if you have any other assets in your own personal name, even those can be taken away to repay the loan. So this is a big problem where you talk about it as unlimited liability. So if you are taken a loan for business purpose also, then also your personal assets will be in trouble. If you speak of the sole proprietorship from the taxation point of view, individual slab rates are applicable to the sole proprietary concern. So basically, you will find that for a sole proprietor, the current limit right now, as on date, what I'm talking of, is for the new regime of income tax, it is 12 lakhs. So up to 12 lakhs, if your profit is earned in a particular year, you don't have to pay tax. But if you're having the same thing as a company or a partnership firm, then taxation will be at a higher rate, 30%, 25%, depending on the type of organization. So advantages in tax slab also exist. However, you cannot claim a salary from your own company, right? Own proprietorship concern. You cannot claim that. So if you are working, you can get profit out of that organization. But if I say I am paying salary to myself, that is not allowed. So these type of things you will have to discuss with your financial consultant, of course, before you finalize what is the best option in your case. Coming to the second category of forms of organization, we have a partnership firm. Now, two or three people or more than that want to come together and want to start a business. They have the same idea, they are on the same set mindset, and they have capital with them. Each of them wants to put into the business and start with the business activity. The organization type recommended normally would be a partnership. Now, partnership is governed by the Indian Partnership Act 1932. So, what you need to do is, if you want to have legal validity of your agreement, you will need to register this organization under the Indian Partnership Act. Many people I have seen are just taking a 500 rupees stamp paper, putting a partnership deed on it, signing it, and saying that this is a registered partnership. No, this is not registered partnership which can legally stand in the court of law if there is dispute. Of course, this will have a better stand than oral partnerships, and of course, this can also be useful for taking a new PAN card, a fresh PAN card for your partnership. That means for the partnership firm, you can go for the PAN card. But it is always recommended that you take a registration under the Indian Partnership Act, so that ahead your partnership firm stands the legal validity test. For a partnership firm also, you will have the similar formalities in terms of Shop Act. So Shop Act, as we have in the state of Maharashtra, we have to get registered if the number of employees cross 10. If not, then an intimation has to be sent online to the government stating we have started with a business. Now, coming to the formalities connected to the partnership firm, you need to prepare your accounts, you need to file your tax return, which will be a separate return. So, A partnership firm's return will go separate, partners' returns will go separate. So every year you will have multiple returns to be filed. Plus, you will have to file what is called as TDS, tax deduction at source returns. You will have to deduct TDS of various types like professional fees paid, contractual fees paid. You are paying some interest, or you are paying any kind of remuneration to partners. All these will have the formalities of tax deduction at source. You will have to file the quarterly returns for it, issue form 16, 16As. So all these formalities are existing under income tax. GST registration, again, if your turnover has crossed the limit, you will require to register and file the returns. Mandatory to file the income tax returns, no matter what your income. Even if you are in loss, you will need to file the returns. So this is a compulsory provision. You will have a specific formats to be complied with. You will have a specific computations to be done in terms of salary and remuneration. So you will need to comply with a number of formalities much more than compared to the sole proprietorship. Plus, the disadvantage here would be if, in case of disputes, you will have to dissolve all the assets, distribute them in partners, and then the process will be closed. At the same time, if there is misunderstanding, mutual disagreement, then business flow will stop because the partners are not on the same page. So these kind of things can happen. In terms of even a registered partnership firm in India, we have what we call as unlimited liability. So in case there is any loss due to even one partner's mistake, and the firm cannot fulfill the repayment of that particular loss of that loan or whatever has been taken for the purpose of business, then all the personal properties of the partners will be at stake, which is a major issue. So if you find that there is no mutual trust amongst two or three people who are coming together, it's not fit for you to register it as a partnership, because tomorrow if one person takes a loan and creates a big problem for your business, then the entire business properties will be sold off. Plus, if anything is less to repay that particular loan, then even your personal properties can be sold off by the government to repay off that loan. So this is a major disadvantage in case of partnerships. Now, advantages, if you're looking at, you will have the advantage of a bigger amount of capital. So in case of expansion and in case of good trust among the partners, definitely a partnership firm will be beneficial because it brings in more capital, right? So if you want expansion, you can go for a partnership firm. Plus, at the same time, you will have different people, maybe of different kind of specializations. Like one could be good at marketing, one could be good at the product itself, one could have a major experience in all the other parts of the organization, establishing it, accounting part, or maybe even fulfilling the other formalities associated with the production of the goods, the operations part, whatever the case may be. So all this can be clubbed together. So expertise of people can be clubbed together. Plus, you will have the clubbing of capital. So these are the advantages if you have a partnership firm. Now, if you want to do away with the problems which exist in a partnership firm, like that of the unlimited liability, right? That was a big major issue. No? So if any problem happens with the organization's loans, your personal properties may be sold off. So to avoid that, what you can do is you can register it as a limited liability partnership. So your liabilities are limited to the extent of capital that you have invested in the business. So only that much can be recovered from you. Rest of the things, even if you have crores of rupees of personal properties, it is not touched. The only thing is that here the government suggests, I mean, it has made the LLP Act 2008, where under that act you need to register it as an LLP. You have to have the Ministry of Corporate Affairs registration has to be done. So this limited liability partnerships which you have registered has to make compliances to the MCA every year. It has to fulfill certain formats to be made of balance sheets of profit and loss, the remunerations which are paid to partners. Then income tax, the similar provisions as to partnership, a higher rate of tax will be levied. So even partnership and LLPs both pay a higher rate of tax. So it's a flat rate of 30% on every rupee that you earn or as profits. Of course, you have benefit of getting salary to partners, paying the amount to partners, paying of any expenditures through the partnership firm. So all those advantages exist. Interest can be paid to partners on the capital they have invested. So this also can be claimed as expense. But at the same time, whatever profit you earn after all this will be taken into consideration as the flat 30% slab. So for those who are wanting to have a better stand in the market, like a name, a reputed name, in comparison to proprietorship or normal partnership firms, definitely can think of LLPs. So you can say it's like a midway, which is the best way for people who don't want to spend a lot on the formalities, but at the same time, they want to get the benefits and advantages of a good name in the market. So with the name itself, like if I say so and so private limited, so and so LLP, it creates a bigger, better image in the market with the name itself. Whereas if you say XYZ enterprises, associates. It doesn't create that mark in the market with the name. So proprietorship concerns or a simple partnership concern will not have that market stand as compared to LLPs and private limited or companies for that matter. So that's the reason anybody who wants to make that mark can go for a limited liability partnership. It's the best option. Here you would naturally require 2+ members. You cannot have one person registering an LLP. So if you have that limitation, then you can think of the next type of organization, which I'll be talking of when I'm speaking about companies. Next form of organization which you can go for is the private limited company. So private limited company normally requires 2 directors, 2 shareholders, and you have to get yourself registered under the Companies Act 2013. Now first it starts with a name approval. Then once the name is approved, you can go for the company registration. You need digital signatures of directors. You need to have a number of compliances with respect to the MCA portals. So a lot of formalities increase with one step as soon as you register it as a private limited company. Of course, advantages are there. If your turnover is larger, you will have an advantage. If you want to pitch in for customers outside of India, or if you want to go for interstate supply of goods, private limited company is the best option. So your turnover and the amount of profitability that the company can earn is matters a lot, because you will have to have a lot of compliances, which itself will cost you a major chunk of your profits. So if you're ready to spend that, then private limited company will be a very good option. Now, here the advantages are the limited liability, of course. You will have more capital, more funding. You can even go for loans from a bank or another company. So when you go for a bank loan, the bank itself, when it says private limited, it has a stand when you go for a loan also. So many things can be better if you have a private limited company. Another part where the disadvantages can lie in terms of compliance is the compulsive audit. So you need to get your company audited no matter what the turnover is, no matter what the shareholders are, the number are, or what your capital investment is. So currently, at least the private limited companies mandatorily have to get themselves audited every year. Formats have been placed for the purpose of preparation of final accounts, the balance sheets, the profit and loss, everything. So you have to submit the basic mandatory formats with an audit report to the MCA every year. If you don't do it, a huge amount of penalty cost is also existing. Also, closing down a private limited company is very difficult. So you have to comply with a number of things before you can actually go for closure. So difficulty lies when you're buying the assets. So the assets are of the company. It has a different, you can say, a complete entity. It is not you. Even if you are running the company, it is not you now. It is a different entity in the eyes of law. So you and the company will be treated separately in terms of business. If at all you are a single person but want to start with a business and want to register it as a company, government has made a very good option for you, which is called as one person company. So it's like a proprietorship but with the benefits of a private limited company. So basically you will have a single person running the company, you will have single decision making, you have your own funds put into the company, you don't have any outsiders coming for decision making or fund for that matter giving the funds to the company. You have full control of the entire decision power, everything. But here you will have limited liability benefits. You will have the benefits of putting it as a name, OPC, one person company, private limited word will be there in your name. So this is very big advantage. So even if you're a single person and want the advantages, you can go for registration of one person company. In fact, you can even convert proprietorship into the one person company by complying with the different formalities. You can have conversion of partnership firms into private limited companies. So if at all you find now your business is growing, can I convert my partnership into private limited? Yes, you can do it with compliance of different formalities. Now, if you remember the Hindi movie Guru, you must be remembering that in that he said that, okay, now we are in need of funds, and we are finding that our business is expanding. So we are a small company right now. We want to grow. We are a private limited right now. We should grow now. So what he did, he issued what we call as a public shareholding. So automatically the 2 or 3 people who were there, who were the owners, now expanded their reach to the common people. People like you and me buy shares in the market of different companies like Reliance, Tata's, you will find pharma companies, you'll find different other companies, the shares of which you can buy and sell. So what are you doing? Once you buy that share, you are also becoming a part owner of that company. So whatever the percentage of shareholding, maybe it may be 0.001 also, but you are becoming a part owner of that company. So this is exactly what we mean by a public limited company, where a portion of the shares are issued to the general public. So without choice, without even them knowing whom they are issuing the shares. So they just put it into the public platform. Anybody who is eligible can buy the shares. So this is what is the difference in a private and a public limited company. Now, public limited companies have bigger formalities, right? Not just the registrations and the income tax and audits and everything, but they will also have compliances as to publish their accounts quarterly. They will have to put it online, like on the website. You can see, you can download their financial statements. You find different analysts using their statements to state whether this company is doing good profit or not. Where do they get that data from? It is all online. It is published by the company. So many different things, many formalities increase into a huge extent when it is a public limited company. Now, it is not a public sector company. Okay, public sector company is different. Public limited company is different. Public limited company means there are private players who are buying and selling the shares, buying the shares of that company, you can say. So all the owners of this particular company, mainly, you can say, maximum of their owners are a public or are the general public, but these are not the government. If at all the shareholding proportion changes, that means if the major holding of a company is the government holding, then it becomes the public sector company, not the public limited. It is public limited only, but it is a public sector company, not a private sector company. If government holdings are not present to a major extent, it remains a private sector company. So there is no government holding in it. Once the government holding starts coming into that company, it becomes a public sector company. So this is the difference. What I told you in part 1 was this, that you have to distinguish between these two, public limited and public sector company. This is the key difference of government holding. Here you need minimum 3 directors and there should be minimum 7 shareholders. This is the formality which has to be done under the Companies Act 2013. And of course, if it is listed on the stock exchange, you will have compliances connected to Securities and Exchange Board of India. So once it becomes a public limited company, it has huge formalities. And of course, the turnover of that company will be sufficient enough if you are deciding to convert it from a private to a public limited company. So depending on the turnover, the scale of operation, a decision can be taken for the conversion. Next form of business organization, which was continued in India since the ancient time periods, is what we name it as Hindu undivided family. So earlier, what used to happen is when people used to do farming, dairy farming, and other activities, they used to have one person who was acting like a karta, a person who was the main chief male member of that family, and under that, the whole family used to work, who used to do the business, and he was the whole and sole manager of that particular business activity. So in that whole family, the sons, the wives, they are you can say grandchildren. All the people used to be together, and this was called as what we name it as Hindu undivided family. So or now we call it as, in short, we call it HUF. I'm sure you've heard of this term HUF. Those who have dealt with tax saving and tax planning tools, HUF is something which can be registered. So this is an addition to your personal income tax return or what you're filing under the income tax. So HUF is a separate entity. The individual, even if he is the karta, he is a separate entity. So, who can register now? This is, of course, coming under the Hindu law, but even people who belong to the Jain, Sikh, or Buddhist communities also can register. So, along with Hindus, even these three communities can also register. Now, what is this entire HUF consisting of? Like, are there any partners or are there any members? So, it is like one male head of that particular family. Under him will be the wife, their children. Children in that you will have their son, their daughter-in-law, their children also, plus the daughters, their daughters, if they are unmarried. So this will be the composition of the HUF. Now HUF is like a separate entity doing their business, filing their own returns, having their own PAN card, having their own set of benefits, exemptions under income tax, having their own separate accounting system to be done. So this is like some different business entity in comparison to the individuals. Of course, even the HUF, apart from tax planning, now is not of much use to have a global stand or to have a better stand in business. So HUF registrations mainly people have done for tax planning purpose. So a business is started in the HUF and then you get a better income tax benefit. For forming an HUF, you need to register that as a deed, an HUF. Once this registration is done, you will get a separate PAN number for your HUF. You file a separate income tax return. A shop act, if at all needed, will be needed in the name of HUF. Any kind of income tax formalities has to be done now in the name of HUF. So HUF is like a separate entity. However, if you're talking in terms of liability, the HUF has unlimited liability. So if the HUF has taken a loan and they fail to repay the loan, the entire family's personal properties will be at stake. Main disadvantages of an HUF would be connected to the family disputes. Dissolving of HUF properties will be difficult. Also, daughters who are married will not be coming under the HUF. So if they want to be involved in the business, then they would not like an HUF to be formed. because in a partnership, in a maybe a company, if they are holding the shares, then even after marriage they still are the owners of that particular company. So this is a major disadvantage of the HUF. Coming to the next form of business organization, let's understand in a simple way. If supposedly you have different people from different parts of the society, different members, but do the same business activity, and they are doing it on a small scale. Now they want to expand, they want to grow, but they don't have to register as a company. They just want to do it for their internal purpose, no profit no loss type of situation, or they want to internally trade between each other, or once that trade is fulfilled they would then go for expansion. Then such type of business organization is what we call as cooperative societies. Now we have cooperative societies all around us in the form of housing societies, but there are also cooperative credit societies and cooperative business societies which can be formed for the purpose of doing business. So the best example in India from the early days, what we normally give is Amul. So Amul is a cooperative society which was formed as a cooperative society, and it took it to a great level, a massive scale, even internationally. When we speak of a cooperative society, it is governed by the Cooperative Societies Act. Now, we have registrations to be done if there are 10 members. Now, formalities have been eased out and the number of members are also brought down. Now, there is a democratic type of management. So, every member holds one share. So, if you look at even banks for that matter, even banks are formed as cooperative societies. So, we often read the names, right? So and so bank, cooperative limited. So what is that co-op? This is cooperative. So these banks are doing the work of money lending and taking of deposits. They can involve people who become the members of their bank also, the shareholders. So one person gets one share, one vote. So you can participate in the management of this particular organization if you hold if the share of that particular cooperative society. So equal voting rights are there, which is a very important thing. No matter your investment in that business, you will still have only one vote, one say in that particular organization, which is a very different type as compared to companies. So companies, if you hold 100 shares, or in that 100 number of shares, if you're holding 80 shares, you have the 80% ownership, 80% voting rights, which is not for a cooperative society. So that's why it's termed more of a organization which is done for mainly no profit no loss basis, sort of a charitable type of business activity and all that. So it's not a pure business format. Here, the main disadvantage would be that there is slow decision making, wrong decision making, mismatch of investment and share voting rights. Right. Then a lot of formalities also exist for cooperative societies. Number of members being more, you have a chaos sometimes in decision making if not governed properly. Then even government sometimes interferes in the decision making because it comes under those governing laws. So, if you're forming a cooperative society, remember there will be a number of formalities from the government side, intervention from the government side. Benefits are there, but along with the benefits, there are also a number of disadvantages which are not good for a pure business format. So, if you want to do something which is like a social cause, a charitable cause, or it's like a member benefit type of thing, like we have sports federation, we have societies formed for some welfare activities. So, all those can be registered under Cooperative Societies Act, not pure profit making business. Another similar type of organization is the trusts. I'm sure you have heard of trusts, which are the charitable organizations. Some of them are private trusts also, which are registered for property management. Some are public trusts, some are private trusts, some are trusts which are governed by the Indian Trust Act, some are governed by Local Trust Act. So it all depends. So here too, you need 10 members normally, but there are even trusts which can be registered with lesser memberships depending on the type of trust that you have, the work that you're doing. Pros and cons, if you're looking at the trust pros, basically it is meant for charitable purpose. So a trust, if at all it's a public trust, it is best registered only in situations where you're doing some charitable cause. Like I'm doing some environment activity, so I register a trust. There are a number of benefits in terms of grants, subsidies, tax benefits, which are given for trusts. Many hospitals also today are running as trusts in India. This is because they get the support of the government. Land is given at subsidized rate, you get a number of things at subsidized rates, you get grants for certain things. So all these things are beneficial. Plus, members who have participated in that trust have limited liability, so they don't have to spare their personal assets in terms of losses to the trust. Trusts get an advantage in the international market if they want to raise funds in the format of donations. So all these will be a beneficial aspect in terms of trusts. Also, trusts work for the cause. So if it is education as a cause, they will naturally invest more, they will work more in the same cause. So beneficially, normally trusts are registered, a public trust is registered for the purpose of a certain social cause. Now, if you're looking at the disadvantages, it's not a pure business activity. So pure business activities don't go for trusts, right? Second is, it if you have to distribute the profits to the members, it's very difficult in terms of trust, because trusts normally have to comply with guidelines of the government. They have to only give the profits for the purpose of the trust. So if trust is registered for a particular cause, let's say environmental cause, then you cannot use the funds for something else. So usage of funds is restricted. So tomorrow, if I want to go for maybe another campaigning, or I want to go for some other drive which is not connected to environment, then I cannot do it. Huge regulatory compliances are there on trusts now. In fact, every year on year, the compliances are increasing, because because the government wants to regulate these people who are running the trust. They don't want the misuse of the funds which the public are giving as donations to the trust, or people are putting in money into the trust, because it is meant for social cause. It gets a number of benefits from the government. So if these funds are misused, it is as good as public money, the taxpayers' money, which is misused. So trusts, if at all, are getting donations, getting funds from government, should use it for the specified purpose. So if they are not doing it, it is at the cost of people who are paying the taxes. So this is basic understanding that we've done about different forms of organizations. So if you want to start with a business, if you want to do a number of compliances, you have to understand what type of business activity suits you, what is the business registration that you need to do for the business activity. So what are the compliances that are associated with different forms of organizations. So it's a general idea which you can get from this particular video. Now, of course, in-depth analysis, if you have to do, you definitely have to connect to the financial advisors. Otherwise, you will not get the in-depth knowledge. So I'm just giving you a rough basic idea of the different forms of organization. Now, coming to 3-4 simple things which are associated with all types of organizations. Now, if you see the GST registrations, GST registration is applicable if you cross that particular turnover, or in cases where it is applicable no matter what your turnover is. Like, for example, if it is interstate sales, export sales, then if you're doing this sale, even if one sale bill is issued of even 1 rupee, you will need GST registration. Otherwise, the limits of turnover would be 40 lakhs, limits of turnover would be 20 lakhs in case of service. So 40 lakhs for goods and 20 lakhs for services, except for the special states. Okay, special states list is different. Income tax, if you have to take a PAN card, except for sole proprietorship, rest, all the organizations have their own PAN card. So different PAN number is issued apart from the sole proprietor. So sole proprietorship, if you have your PAN number, the individual, the owner's PAN number is the same PAN number for the business. Rest, all the business organizations will have separate PAN. TDS formalities, income tax formalities are different for different organizations. For example, if you're taking cooperative societies and trusts, you will have some concessions given. No tax needs to be paid in many cases for these organizations. The limits of tax benefits are different. The limits of no tax applicability are different for different organizations. For example, if you take partnerships, now partnerships firm will have tax right from 1 rupee of its profits. So every single rupee will be taxed. Even for companies, it is the same. So profits, after all expenditures, whatever is left in hand, the profits will be taxed at a specified rate. You will have surcharges, you will have cesses as applicable on different things. Plus, under each law, like trust, if it is registered, you will have to comply with the Trust Act. If it is Cooperative Societies Act, you will have to comply with Cooperative Societies Law. If it is Companies Act, companies are registered, private limited, one-person company, public limited, whatever. You will have to comply with the MCA, the SEBI, whatever is applicable in your case. Hope you had a basic understanding of the different forms of organizations, and a little bit of confusion is resolved as to what is best for you and your business. What is best form of organization for you to start off as in terms of business. So for the next part, the third part of this particular course of organization of commerce and business management, we are going to learn of different government organizations and the support they extend to businesses. So this is also going to be a very interesting part. So if you do business and you want some government support in terms of funds, in terms of any kind of advisory role, then the next part of the video will interest you to understand these things. So stay tuned to this channel of Commerce Gyan, stay subscribed, and pass this knowledge on to the people who may need it. And let me know in the comments what you find, how you find this particular video, what more things you would like to know in terms of your business. So hope to see you in the next video of Commerce Gyan. Thank you.